telling you we're going to move. We don't know where, but we have a high tendency to rally. So you want to turn your focus to that. So those are the things that you want to look at. And again, for shorts, it's a warning that this market could turn higher, and for longs, it's giving you an indication that it's ready to break out. Okay, now some traders out there who are listening have auto chartists, and they may be curious on how to come up with these filters. And there may be some new people out there too who are looking at the program for the first time. So I thought I'd go through the steps that show you how to come up with these patterns. And the first thing you want to do is you want to go to New Search, okay? And you want to select the market that you're interested in. So in this case, we can select with New York market just about opening, we can select New York Stock Exchange all intraday. I have a huge selection here of various exchanges and various asset classes. So if I select New York Stock Exchange intraday, that's going to be the group I'm looking at. Okay, now I can go to Advanced Search down here, and I can scroll down, and I can look at various filters. Now, if I'm trading equities, sometimes I want to use the minimum price and the maximum price filters. I'm not comfortable with trading stocks that are very low price and very high price. I like something in the middle that's going to attract a lot of volume and a lot of activity from high frequency traders or institutions. Now, one thing that you want to note, remember we talked about it and you answered the question right, this is a bullish indicator. An inverse head and shoulders is a bottoming indicator or an accumulation indicator, as I said. All those are key phrases indicating that it's something that's looking for a bottom. So rather than have it search through many patterns, I'll select bullish right away here for direction. So that eliminates the bear and the combination. Okay. Now I also noted that it's a reversal pattern. So you have a choice here: continuation, reversal, or combination. So I'm going to select reversal to make it easier. Okay. Pattern length isn't that important to me, nor are these other quality indicators, at least for now. For this webinar. We have specific webinars dealing with all of these. But as we scroll down, we start to come to the patterns. And the first thing we want to do is every one of these patterns will be covered at some point in a webinar in the future. And we'll get into the specifics of those patterns. But right now, we want to eliminate all the patterns that have nothing to do with an inverse head and shoulders pattern. And that includes channels and wedges and triangles. And as we scroll down, we take out the head and shoulders, triple top, flag, pennant, and we're finally with the triple bottom, and that leaves us with the inverse head and shoulders selected. Okay, now if you wanted to know what this meant or what this means, we have articles that you can go to at the website that explain the chart patterns and their characteristics, and of course probably be able to listen to this webinar later. But you can always hit on this I button here, and it's going to give you the characteristics of the head and shoulders. It's going to show you, tell you that the three successive peaks, middle is the lowest, two outside higher, and relatively equal in height. That's the textbook aesthetically important looking inverse head and shoulders pattern. It forms after a downtrend, which is right because we're looking for a bottom. And it also often signals an upcoming trend reversal, which we covered also with that real example, and we also checked those boxes. So that's very important so that you always have that going for you. So now we go back and we create search. And it's crunching right now. And again, it's active market. As I said, I timed this out so that we would have this at the end. You can see from this dot here, this orange dot, this is the alert that went off. It went off for, I put the symbol in our IHS, Inverse Head and Shoulders New York Stock Exchange. You can see that New York Stock Exchange just opened here. So it's been open for about 6 minutes, and we're starting to get some activity in the marketplace right now. Waiting to see maybe after the 30 minutes are up, we'll start getting 30-minute signals, or after 15 minutes are up, we'll start getting fresh signals. So that's real important to look at. So if we click that on, you can see that signals start to come up, both emerging and completed patterns. So as of yesterday, as we watch this market, as of yesterday, this EMN stock gave us an inverse head and shoulders pattern on 30-minute chart. Okay, now after the first 30 minutes today, we're going to start to see how this pattern, what materialized as this market broke out to the upside. Here's the head, here's the shoulder, the neckline. I don't know what that was, but here's the head, the shoulder, the neckline, and we're looking at the breakout to the upside here as we're crossing through this neckline, and we have AutoChartist has identified a target. Now we've also got a breakout indicator here, and this shows that we have a 1 bar, so a low breakout. You can see it barely broke through resistance. As we go through various patterns, you can see that we could get stronger breakout patterns. We can also go to this particular search if we wanted to, and we could select a filter where we set a minimum breakout strength. And in this case, we'll set it at 5, and it's going to let us know there's a pattern here that's got a 10 breakout. You can see that it's clearer on the breakout. So those are little filters that we can do on live data. Okay, so now I showed you how to do the search, and then we're looking at live data. Let's finish up some of the other trading rules that I mentioned earlier. First question, I have another question, and it's a true or false. An inverse head and shoulders chart pattern suggests upcoming trend reversal. True or false? So far, 100%. Let's try to get everybody to vote. We only have quite a few people in here, but it looks like we're getting a little bit more than half voting. So we need to make sure everybody's watching. I know the market just opened, but just have a few more minutes to go, and we can wrap it up. And that's good. We've 70% voting. That means you're watching and you're listening. I appreciate it. Thank you very much. Okay, now let's look at when we look at these markets, let's look at, say, a currency market, see if there's any activity taking place. Okay, we have August 25th. There's one particular, and this was a euro yen that gave us a breakout that's continuing out to its own. Okay, there's two ways, or I want to say basically there may be 3 ways, but let's look at 2 ways to enter. The basic entry for the breakout, and the one that's going to complete this pattern to produce an alert for AutoChartist, is going to be out entering a long trade on the breakout to the upside. Okay, so you're going to look at a long trade to the upside. All right, that's when it breaks the neckline. AutoChartist will complete the pattern and give that to you. All right, so you have to set, because it's a momentum trade, it's suggested that you set your stop loss under this neckline. Common rule that I follow is if you're trading breakouts, you want to get in on the breakout, you want to get out when the breakout fails or when momentum slows down. That's the way I prefer to trade it, and I tend to take the quick out. If you take a breakout and you revert back to this shoulder here, you've basically turned yourself into a swing trader. That means you're going to have different risk-reward characteristics. If you take momentum moves, and you have this target identified, you can see they're pretty tight. So you want to look for a good risk-reward ratio. If you all of a sudden get a pullback in this market and you miss your exit, your stop, and then you go back down here and you rotate to this stop, you're going to get different trading characteristics that maybe make your ratio suffer your risk reward ratio. So you always want to try to if you trade a swing, enter on a swing, exit on a swing. If you're trading a trend line indicator chart, you want to enter when the trend turns up, exit when it turns down. And if you're trading momentum, you want to enter on momentum, you want to exit on momentum. Until you develop a skill set where you can handle all the scenarios, it's best to trade with the method that got you in the market, exit basically the opposite. So in this case, you got a breakout. You want to see you'll exit when it breaks back under that neckline. Now, all breakout strategies are risky, of course, because you can get a failure. But just keep in mind that if you keep the tight stop and relative to this objective, then you're going to be all right in the long run. Now, an aggressive type of trader is one that knows that this shoulder has formed, this neck has formed, and this head has formed. And then finally, when he sees this shoulder form, or this neck form, excuse me, he starts to anticipate that this market is going to turn on this neckline. Okay, so what he can do is a couple of things. He can wait for it to come back. Say there was a horizontal line here. And let's go back to, say, this StockNext chart, which is a little bit clearer. This type of trader can see a shoulder, neckline, head, and then he sees this line form. He can anticipate a pullback here to stop at this neckline, and instead of waiting for the breakout, he may try to buy in this area here. It's aggressive because he doesn't know it's going to stop there. But once it stops, then he knows he's in ahead of these other traders. So that's one way to be an aggressive trader. Okay. Now, if you're doing that, you want to see volume kick in to help you. Excuse me. And give you clues that the market is getting ready to turn. So a conservative trader is looking for this breakout here on a completed pattern. An aggressive trader is anticipating the formation of his right shoulder and trying to jump in ahead of time. And that's very important to watch for, to determine what kind of trader you want to be. Okay, now some also, after this shoulder is formed, they'll draw a trend line up from the head to the shoulder out into the future to see if the market picks it up again. I've seen that style too. So there's basically three ways to treat the information that AutoChartist has given you and to make a move in the marketplace. So that's one way to look at it. Now, in terms of stop losses, you should use the stop loss all the time because patterns can't fail. And a lot of times it'll fail right away. And again, if you miss your first exit under the neckline, then you're going to have to hold on here. And finally, if it does break through the head, you can end up with in a lot of trouble. So it's very important that you do use a stop loss. All right. Now, as far as targets concerned, AutoChartist identifies this target zone as this gray box, and also this forecast zone here is the actual numbers of where the market can go to. And typically, the target zone is equal to the distance between the head and the neckline. So if you take the distance between the head and this neckline and then add it to this breakout point, that's typically the measurement. So if you can measure this to this, add it to the breakout, and come up with some figures, and if that overlaps or agrees with what AutoChartist is looking for, then what you've done is you've created like a target cluster, and you've created an area that could possibly be the next major top. So it's very important that you always try to come up with one or two different ways to determine an exit. Now, I want to also say that it doesn't matter what time frame you look at. It can be a 5-minute, 15-minute, hourly, 240 daily. And it really doesn't matter what asset class. As you can see here, and I'm wrapping this up right now, we can go to a commodity, and we can see that we can have these patterns inside a commodity market. Okay, these conditions aren't actually that good for commodities right now because of the nature of this market. Most commodities have been selling off lately. So we did have one buy back in early June, and since then there haven't been a lot of buys. That's not the program, that's the market. Remember, this is looking for bottoms. We can also look at FX majors.